Hello and good morning in Europe, good evening in United States. This is Ahura again with another daily outlook videos. As you know, in this series of videos, we are looking at the market to see what is going on at the market, what happened, and what is our expectations from today. As you know, the market is increasing for several reasons, geopolitical reasons. That's who's again attack to the United Arab Emirates in the Middle East. They attacked the airports and refineries, which caused the oil price also to increase. First of all, let's go to see first the US dollar. This market risk is increased. With this, let's go one by one to the US dollar. After US dollar, we're going to check the oil. At the same time, the market is pricing more and more every day on the rate hike on the March. And so with the comments from this several FOMCs, it looks like the market didn't get it accepted or get it last week so good. So step by step, the market pricing more and more on that. That's why we can see that this higher possibility of increasing the rates on the March and next month, even if not in the March this year, even if later after March, uh, increasing the possibility of rate raise this year help the US dollar demand to increase again. You see that the US dollar trading currently at 95.33. Earlier we had 95, almost 45. Above 95.50, the bulls will gonna run much faster. Above this level, if we catch it, which is so close to go, bridging above this level will cause the bulls, will lift the bulls for higher levels again above $96. In the oil market, as I told, the Houthis they attacked the United Arab Emirates airlines, airports, and refineries. This attack increased the market risk and increased the concerns about the supply in the market, while the demand is increasing. So therefore, the oil reached another 7 years high above 80, almost $85. Yesterday we had almost $84, and today we had almost $85. But all the fundamental and technical analysis is all about increasing the oil price, and we don't see the reasons to say that the oil is going to decrease, but we have too many reasons to say that oil is going to increase. That's the reason that we saw in a market situation here. So the oil is increasing fundamentally and technically from both sides. It is still bullish. About the gold, let me tell you something. Look, gold is, if you remember, I told the gold created a Zayed movement. Created another area, another range of the movement between 1,812, 810, let's say 1810 and 1830. That's like kind of conclude the numbers. 1810 and 1830. This is the new range of the goal. The goal for any next movement suppose need to bridge this level and get out of this level. Totally, as I told before also, the lower lows is getting higher highs also same. Therefore, we can see that generally gold is moving in a little bit soft uptrend. So therefore, our bets for the gold will be buy with very high concerns and high risk. But the bulls have much more reasons to go forward than the bears at the moment for now at the market. But generally, gold is in an uptrend, in a soft uptrend. But right now, for the short term, it is in a side movement, and any uptrend need to start above 1,830 or 1,830. The silver almost had the same situation, creating between 22 and 23, $24. 22 and $24 is the range that the silver is kind of blocked here and for a long time. We need a little bit more. How can I say the more reasons to say that okay, the silver is ready to take off from here. But generally, silver is a positive, and still we can say that it's back to the same as the gold. It's back to the uptrend at the same time. The positive outlook for 2026 will lift the will help the silver to grow faster. This candle that you can see here is the reason of that this is such a huge candle of the US dollar chart. But generally, silver moves in a clear uptrend. About the stock market, and generally the risk sentiment in the market. First, look, the market risk is increasing at the same time as I told that because of the geopolitical and increasing the tense geopolitical tension in the Middle East and increasing the possibility of rate hike in the March. At the same time, we have another risk. Russian and Ukrainian border. It is but the Russian tension is better to say the Russian and NATO. The Russian and NATO, they didn't get to the final point. As you know, they were talking for the last days and they didn't reach any specific result. Therefore, the market risk here also is a little bit higher. At the same time, we have the reports in the market. We have the earning reports in the market. Therefore, the stock market risk a little bit higher right now, and it means that we can see a little bit cautionally trading between the traders and investors. However, generally, as we can see here, generally we are still in an uptrend as long as we are trading above for 4,500 at the first at the yeah, so we can say that 4,530 is the main, but this is the trend line. Just draw the trend line for yourself. As long as you are trading above this trend line, we are in a generally positive mood. But any bulls, they need to go above 4,700. Generally, the market is in, we can say this like a side movement with the bullish tendency. Let's better say that. But in the short term, we have a higher risk in the market. The Nasdaq is falling sharply, a little bit different reasons. You can see the rate. Just check the rates. Same as the gold happened. What happened for the gold? The rates, the 10 years US bond yields increased to 1.85, almost 85%, just like 85 1000 1.85%. It is for 10 years US bond yields. It means that the markets it means that while the market risk increasing, it means that the bond market is less less interest for the market. At the same time, we can say that no, increasing the possibility of the rate hike increase the bond yields as well. So these are the different reasons in a different situation. So we cannot say that always the bond yields increasing because the lower risk in the market or higher risk in the market. Sometimes they are a different reason. So this increasing the bond yields is because of the more possibility of rate hike. So as long as we can see the bond yields in a higher levels, it means that the tech stocks will be under pressure, same as the Nasdaq. So we can see the Nasdaq here. So the Nasdaq in the short term, clearly the we can, let's say that the trend line for Nasdaq also is not very steep, same as the SP 500. But Nasdaq can be a little bit more under pressure. But about the Dow Jones also is the same, but with a little bit different situation. Look, for the Dow Jones, we can see that the downtrend is a little bit riskier here. The trend line is a little bit riskier here. We can see more possibility of downside movements here in the Dow Jones. But there are several reasons for that. In SP 500, we have the companies that they can keep the balance. In Dow Jones, it's like just 30 companies, and if there's something happen between the few of them, just two or three of them, it can move the market much faster to desired movement, same as the Nasdaq. But SP 500 will downside risk will be a little bit less than others. Generally, as I told, the market is so cautious these days, and in the short term, they will be under pressure, but in the midterm, it is positive. the Bitcoin and other cryptocurrencies, as I told in the last weeks and the past 2 months, still we are under pressure. Still, we do not have any reason to say that none of Ethereum, Ripple, or Bitcoin to say that they are moving higher, or to say that they have a reasons to increase. From the both technical and fundamental side, Bitcoin is in a clear downtrend. uh, 38K is the next target as soon as we push the 41K lower. This is the financial. This is about the situation in the Bitcoin. Generally, we can say I can say in the cryptocurrencies market. I don't have any. I don't see, or I didn't read any. Let's better say that I didn't read any news that they can say, okay, based on this news, the market is positive. Even the Malaysian central bank just started, not just the Malaysian. There are several banks in the last days. They started their central bank digital currency, their CBDCs. But it doesn't mean that it is going to be good or bad for the cryptocurrencies market, because CBDCs are still they are totally different. But coming the central bank digital currency means that the step by step, most probably we're gonna we will not need the stable coins like a tether and like a tether, yeah, because US dollar, if especially we have the US dollar, uh, so if you have the U.S. central bank digital currency, let's say what's going to happen there. Dogecoin and so many of others, they stop, they gain lower. Some countries like I think Malaysia or Indonesia, I don't remember exactly which one of them. They banned the advertisement in a public area for the digital currencies, for generally cryptocurrencies, banning the advertisement in Singapore. Sorry, Singapore. Yeah, the Singapore banned the companies to advertise their products for the cryptocurrencies. I say that generally the market risk is not the market situation is not something you can say, okay, you know what, based on this, we can see the uptrend in the market. But in the currency market, Euro USD is still, as I told, Euro USD's bulls were very short lived, and the Euro USD is still a little bit under pressure. We will see the Euro USD above around 1.13, 1.14, these areas. We don't see too much lower or too much higher for the moment. Pound for the short term, as I told, will be a little bit under pressure as the gold is as the US dollar is increasing. This this pressure on the on this pressure on the pound can continue even a little bit longer during the 2021, because 2022, because 2022 economic outlook for the UK is not bright. On the economic calendar, yesterday, as I told, we had a great news from the China, mixed news actually from the China, which caused decreasing the rates for some specific loans by 10 basic points, which was very, very interesting for the market, and which was very surprising. Earlier today, Bank of Japan had interest rate decision as it was expected. They didn't change anything on the interest rates, but they're gonna change. They're gonna have. They announced that they're gonna have. They will continue their support from the market. Bank, Bank of Japan will have still will continue its dovish established policies, and that's why there is you can see the yen in a weaker position against its crosses, especially against US dollar. Uh, again. What's more, we have today an economic calendar. In the economic calendar, oh yeah, we have today's the data. We have earning the purse for earning average earnings, actually average earnings for wages or average earnings from the UK will be very important with the employment data. Totally, the employment data today from the UK we will have, and it will be very important to watch. A little bit softness there, and a softness in a pound is likely. And in German data, German economic situation, economic condition, sentiments, data will be important. Same as we have the same ZEW Eurozone economic sentiment as well. Today in the US, we have New York Empire State Manufacturing Index. OPEC monthly report will be very, very, very important for the market to watch. And we will have the auction for the 3 and 6 months bill, 6 month bills in United States. Okay, guys, it was a pleasure talking and recording this video, or say that the reporting the market situation for you. Let me know your ideas and your ideas in the comments. It will be very important for me. It is very important for me to know how you guys thinking about the video, what you want me to cover more or less in this video. See you all tomorrow, and bye bye.